The time has come, people. The stock market is getting ready to explode. Tomorrow we got that CPI data coming in. After Thursday, we also have financials earning. We got a lot to talk about on today's stock market brief. What to prepare going into these next 2 days. We're going to look at expected moves as far as where the market may just go based off of implied volatility and so much more. Let's get into it. Alrighty then, welcome back. So yes, CPI is coming out 1 hour before the market comes out, and the market is pricing in some implied volatility, meaning that there's going to be an explosion in volatility whether you like it or not. That means to the upside or to the downside, we'll map out those key levels. Now, from a positive sign, this rally, does it actually mean something? Does it have legs? Well, I will tell you that we are getting positive breath in the markets. Now, things are looking overextended, but just take a look here. This is the NASDAQ record high percent index. When it crosses down below this minus 20, but then finally crosses back above 35, it has marked out bottoms, and those bottoms right here are being highlighted on the screen by these vertical lines. Now, there was one fake out over here in 2008, which I want to point attention to, but as it stands right now, we are getting above that. We still have time in the week, so this can potentially close below it. I'm not too sure, but this is telling us that there is breath coming into the market. So even though that the market has been on a pretty strong run and may back off a little bit, if this stays above and continues to press higher, that could be a good sign for the overall markets. Now, looking back over to the 2008 marker, I will point out that when it did cross above, take a look here. If you can zoom in, right? We had this nice big bear market rally, pulled back, and then we started to get a rally again. That rally triggered this right here. Now, notice we had this big bear market rally, sold off, right? Now we're starting to rally up again. It's starting to get above. The reason why I'm pointing that out is because this rally over here didn't cross back above this prior high. So actually, really, what you'd want to see is that I'm looking at the NDX. It would be nice to see it recapture this prior high. So yeah, is the bottom in? Can you take the chance? Well, we're seeing this strong breath. I can understand why people would want to get some exposure to the long side or trade it or whatever the case is. But that is something that I'm paying attention to. Spring bottom fisher also turned back up there too as well. I like it personally when it crosses down below the minus 30 because that marks, stronger bottoms as you can see here, here, and here. But it is curling back up, which it's not, like I said, I like it when it gets more extended. But we have seen times where it crosses around it and then it does, goes down, goes up, and then starts rocketing higher too. And same right here with this one. Okay, another good thing to point out here is the NASDAQ McClellan oscillator. Huge amount of breath, but it is also moving into that overextended territory. So that is also something to watch. So good breath means, yeah, even though the stock market is extended and we might pull back a little bit, still this breath right here leads me to believe that there still can be more gas in the tank on this specific run, but we'll need more data. If you take a look at the summation index, yes, it's pointing straight up there, but also the NYMOT, the Nisey McClellan oscillator. So this is looking at the New York Stock Exchange more broader, right? Or one of the more broader index products. It's also moving into these overextended territories too as well. So right up and around that 250 to 300 range. So that tells me, yep, strong move, strong breath. That's positive, but it is getting a little frothy. So I would be paying attention to a potential pullback here in the near time. If you take a look at the BP SPX chart, RSI is cranking still up, as we've pointed out right here when it was overextended to the downside, that it could really release or potentially move into a positive divergence or rally back up here to the 70 marker. If we take a look at the Nisey bullish percent index, we had that bullish divergence play out to the upside, moving almost back into oversold territory. It's at 65. Want to see that at 70. BPCOE on PQ, NASDAQ composite bullish percent index also up at 64.83. Looks like it's moving into that overbought condition here in the near future. Now, we've talked about quite a bit, but now I want to talk more specifically about what is the market pricing in tomorrow as far as an expected move. Now, this is what the market is pricing in for the SPY. It's pricing in a $7.52 expected move. On Friday, it's pricing in about an $8 expected move. So 8.50 cents or something like that, plus or minus. Now, at the start of the week, we were looking at roughly a $9 expected move. So with 2 more trading days left, we're looking at about the same amount of volatility. So you can see, we've had 3 trading days so far. So if we were here on the 12th, so this was 1, 2, 3. So we started our week basically right here. All right, right here. And you can see the market has been on a nice, boom, boom, reverse, but then a nice big rally. But we still have plus or minus, and we haven't even hit that expected move of, $7 for just tomorrow's report and then 8.6 going into Friday with all the financial earnings. So this rally right here, it can get reversed on if the market perceives the data to be poor. Now, what is that $7.52 expected move looks like from a plus or minus? That can take us above the weekly expected move and shoot us to around 403, or to the downside 388, which is right around that 5-day moving average. Now remember, the report comes out 1 hour before the market opens, so we could very well hit one of these levels right out of the gate. Now, if the market perceives it to be, very bullish, like it comes in under consensus, like 6.4 or lower, we had the bank JPM, right, or JP Morgan. They're saying that we can see a potential rally if it comes in below that up to like 3%. And if that is the case, we can see a potential 2 sigma move, which would be absolutely insane. A 2 sigma move could take us to 410. It could take us down to around 380 on a 2 sigma move. So that is something that we got to pay attention to. Now, the market's been rallying. You can see here, boom, negative divergence on the RSI, negative divergence on the price momentum oscillator there too as well. And you can see, right, price is moving higher, but the momentum indicators are slowing. Now, if we take a look at IWM, it came right up into the weekly expected move, negative divergence here, getting extended from that 5-day moving average, but it is pointing up. So that is a positive sign. And you take a look at the Qs, look at where we closed today, right on the expected move. Actually, 1 cent, within 1 cent above. It's 277.54 for the upper expected move, but you can see here, negative divergence. We're seeing a lot of different equities, short squeeze, right? Now, one thing that I did find interesting today is you can see here, volatility was up. S&P 500 was up there too as well. It was up 2.48%. S&P 500 finished out 1.28%. Now the VIX came in at 21.09, which roughly equates to a 1.32% move on a daily basis for the S&P 500. Given that we're having the CPI report tomorrow, given a look at the expected move, I think we're going to see more volatility than where we currently stand here. Another thing to pay attention to going into tomorrow is the dollar. So the VIX was up, and then if you take a look at the dollar has been just consolidating sideways within the last 2 trading days of the prior candle right over here. So we just had 2 very, very small momentum type candles based off the size of their bodies, while the S&P 500 has been moving up. There is a subtle divergence that's positive on the RSI. I prefer it to get a little bit more overextended and then a little bit more clear divergence, but it is what it is. And if the dollar starts moving up, that could put pressure obviously on the S&P 500. Another thing to look at is gold. Gold has been also putting in some smaller momentum type bodies here, just smaller body. But you can see, strong body. That's a strong momentum. And then the smaller body leads me to believe that, hey, momentum to the upside could be waning here. And we are in a rising wedge structure, which is typically bearish. And then you also have a negative divergence here on the RSI. So gold taking a back seat may lead me to believe that, hey, the dollar has room to potentially pop here. Also to note, we still have just massively inverted yield curves. We'll be continue to watch these and see if we see massive rates of change there within the 10-year yield, which we know has a big impact on things like housing and various other assets. Now, the last thing I want to focus on here is the zones. We talked about a lot so far. The zones are still red hot. Let me tell you, we're looking at a high of 39.74, but we close at 39.69, so just slightly above it. And I think that if we get a positive, market reaction, I think we're going to go into the 4,000 range, which I saw some orders hanging out there earlier on the Bookmap software. So we're looking at 0.12% upside to around 4.62% downside there. Now take a look at the Qs. We're also looking at 0.27% upside, minus 6.29% to the downside. So we're talking, there is a lot of downside risk. And unfortunately, it's coming on a report that is just binary. We don't know whether it's going to be perceived as good or bad, or what it's going to come out at. All we know is where price currently lies, and price as it stands right now, it's at the upper ranges of their weekly expected moves. Right, we're seeing a short squeeze rally. We're seeing people potentially cover or try to chase this move, and we're getting a lot of overextended charts, but we're seeing positive breadth. So quite confusing overall. What do you do in this environment? Well, I don't typically just run to press super long, but if the market perceives it as good news, I will take some scalps intraday, and then on pullbacks, I will look to bring in some more equity as far as long exposure. That's all I got for you on today's episode, everybody. Have a good night.